Hi, good afternoon, everybody. Just wanted to talk to you about a particular trade on CYH. Do a little recap for everybody here. A fantastic trade today. So, what are we looking at? So, last night I did call out CYH. They're a company that's actually they organize and they own several hundred hospitals across the country, and they basically own and operate general acute care hospitals all throughout the United States. Um, and you can kind of see their profile here. They offer general acute care, emergency room, general specialty surgery, critical care, internal medicine, obstetrics, diagnostic, psychiatric, rehab services, as well as skilled nursing and home care services. So um, almost don't care, right? Don't want to get married to a stock, but we definitely want to know, what the company is, and of course, what sector it is, among other things, so you get a general understanding of what you're dealing with. So I was able to call it out and I identified some things, and let's talk about what those things were. Well, I've been watching this stock for quite a bit, really going back to mid-November, right around here, and I was able to kind of draw my lines of support and resistance, right? So if you look at November, this is kind of where it caught my interest when it started spiking up a little bit. Obviously, it's mid-range. You don't really want to get into a stock mid-range between the support and resistance lines. Too much risk, right? You really don't know which way it's going to go, despite all the indicators. You really want to wait till you get to some resistance level, or even some, support level. You really want to look at resistance levels as kind of like a ceiling, right, of a house, and then the support levels being, like a floor, the flooring. Okay. So what caught my interest was, I check on these stocks every single day. They're on my watch list. I'm looking at the sector. Sector has been pretty hot lately. And I noticed that there's been some uptrend here, really, in January going into February. And then right here, right when they report earnings, on February 19th, it caught my eye because there was a huge spike in volume, and we break out of this kind of multi-month resistance level, right? So got me very, very interested. Actually, yesterday midday, and yesterday was February 20th. So I watched it throughout the day, and if you kind of look at let's take a look at the 1 minute chart for yesterday. Um, we see some steady increases all day, right, in terms of price increases. And it just kind of rides this 20 simple moving average all day. It dips down below kind of this 50 moving average on increased volume, but it recovers fairly quickly within a few minutes, continues to range. Looks like we get a sell-off here towards the end of the day, right into the close. And then, of course, this morning it continues ranging. But of course, I got out of it. But let's talk about what that looks like and what the trade involved. So if we go back to 1 day, again, it breaks out of this multi-day range, multi-month breakout, right? If we spot check just on a weekly chart, I like to do that because it kind of gives me the idea of where it is on a weekly level. Remember, markets go through cycles, right? They go through periods of consolidation, and then they go through a period of markup or expansion before they consolidate again, and then mark down before they range bound again and start the process all over again. So as you can see on a weekly level, again, this is consistent with our initial phase of the market cycle, and now that we're expanding out of it on large volume with good earnings, a nice little catalyst, it's important to hone in, right? We want to play the best setups and preferably take the A plus setups. Okay, so what did I call out? I said, look, this is a price at 672. It has broken out of its multi-month range consolidation support and resistance levels. We have a float of 110 million, with a market cap of 801 million, but some massive volume, 18 million traded on February 20th. Relative volume is fantastic. Anything above 2 or 3 tells you that there's a lot of interest, a lot of traders involved, and a lot of activity going on in terms of shares being traded back and forth between buyers and sellers. Of course, the average volume over the last course of I believe it's the last 20 days, 2.13 million, which is fantastic. Short interest is a little high. This is basically all the open short sale trades that are open that have not yet bought to cover or bought back to cover. So a little high. I like to see this under 5%, but I was monitoring it, and of course you can't get every variable in your favor. But I figured if most of these variables are in my favor, and this continues to spike up today, which it did, and I'll show you what it did, then this has a potential for a short squeeze as well. And what that is when you have price continuing to increase with a bunch of buyers and price going against short sellers, because remember, short sellers want the price to go down. They're betting on the price going down. Then they will buy to cover, and it will continue to increase the price moving forward, right? It becomes a self-fulfilling prophecy. So the reason why I wasn't too worried about this is the short volume. Now, what does that mean? So again, the short volume is the number of shares that have been reserved to short by potential traders, but no short open sell position has been opened, right? So there's interest, but the interest is at about 1/3 of the percentage, right? So you have 1/3 of the interest that's out there. You have just over 15% of the actually short positions that are open have yet not bought to cover. That is not too risky, in my opinion. And I say that because we have a huge catalyst here. We have an earnings winner, okay? Want to buy earnings winner. We're in the middle of earnings season. This is a good stock with some good variables. They have good fundamentals. In addition to a technical breakout, they topped their year-on-year estimates with respect to financials. So if you dig into the fundamentals, I'm purely a technical trader, but I definitely do take fundamentals into account. It just increases your position and increases your odds of winning. But also, we're hitting 52-week highs. So a 1, 2, 3, bing, bang, boom on the news catalyst, which is definitely something you want to see, with high volume, fantastic. So you can see why I'm kind of building my case here, why this is becoming an interesting stock to look at when I was looking at this yesterday. Average true range at a 42. Definitely want to see that under 1. Institutional ownership, 94%. That is very high, but again, you definitely want institutions involved in owning this stock, because if the stock, not always, but if it tanks, if you will, or tends to fall a little bit in price, these institutions will come right in and buy up a bunch of shares to kind of create a support line to continue the trend moving in the upward direction. Again, that's not always the case, but it tends to be the case. The beta, in terms of monitoring the volatility, we want to see that above 1. Here we're at 2.32, which is fantastic. RSI is kind of elevated. Really, anything over 70 is the textbook rule of it being overbought. It actually went even higher today just because the price increased. So I was a little worried about that, but not too worried, because again, this is quickly becoming, as I explained here, an A+ setup. The long-term chart, if we take a quick look at the long-term chart, we see this contraction phase, and then we see a reversal back in September, increase, and then we see some serious sell-off in November. And then I started getting interested in it. It became on my radar back in November, where we start seeing this uptrend, and then another sell-off. Um, but overall, we're seeing kind of this range bound, and now it's become bullish on the daily. Um, the ADX, this is a market indicator for the direction and of the trend and how powerful that direction is. So really, anything above 30, as a general rule, is a strong indication that the upward trend will continue. Okay, the current market direction. This is the overall market. When we look at the Dow, the S&P, the Russell Index, we look at all of these different markets where they're at. They were ranging for the day, so they were kind of trading sideways, battles between the majority of the buyers and the sellers. So the gap up of 39% obviously excited me. We're entering this markup phase where we have gotten out of this initial phase, okay, the consolidation phase, and we're entering the second phase of the cycle, which is the markup or the expansion phase, which I indicate there. I also, before I enter any trade, I always look at these three things, and this is kind of like my final check before the plane takes off the ground, right? This is the plane is taxiing out, and you're coming to the runway, and then the plane always makes a final stop, right? And they need to get that final approval from air traffic control that you're cleared to fly. Well, before I enter any trade, I always look at these things, and they become my final green light. So VWAP, the volume weighted average price, is an intraday indicator. I like to see the price above the VWAP, which indicates a bullish trend move. Okay, the bid-ask spread, I like to see that within a penny. All right, anything more than a penny or two will get you in trouble. You'll end up paying a lot more for particular shares of the stock. If you're not familiar with this, I encourage you to look on Investopedia.com, read a few books, articles on the bid-ask spread. It's very important that you get a handle of this, because this will determine how cheap or expensive your entries will be on a particular stock when you buy shares. Okay, and then of course the time and sales. I like to look at not only the time and sales, but also level 2. I just immediately spot check it just to kind of see where the trend is going. Right? Are we trending up? Are we trending down? Do we have any high, heavy institutional buying going on, and so forth? The typical moving averages that I use are simple moving averages of 20 and 50, reflected on this chart, 20 being yellow, 50 being red. We see a crossover of the 20 over the 50 right here, which indicates a bullish move, and obviously we continued that here. I also check the SEC filings, so we definitely want to avoid any stocks that have financing or that are in litigation, or filing for bankruptcy. These are all things that scares off investors. You want to just steer clear of those, no matter how good the setup is. Just don't get involved in it, because it certainly is gambling. I can't tell you how many times I've had setups where bankruptcy is involved, or law firm is investigating a particular biotech or pharmaceutical company, and the next day gaps up almost $1. And you know what I tell myself? I just say, you know what, that's fine, because at that point it's too risky. It's a gamble. It could have gone either way. And if investors didn't take that into consideration and drove the stock price up, well, that's fine. There's plays almost every day. There's better plays, and I tend to stay in my lanes with my A+ setups and only kind of stick to my own rules. And when you typically, amateur, professional, retail traders, when they step out of their comfort zone of what they typically trade, and the types of setups that they have the data to back up, they typically will lose on those trades they step outside of. So outside the boundary. So again, in this case, I didn't see anything, so I just indicated clear. I also like to see the CEO purchases or any insider buying, right? So it could be CEO, it could be CFO, anybody on the board of the organization. Anybody buying recently within the last 30, 60, 90 days is a strong indication to me that there's interest. These are individuals that know more about the company than you and I ever will, right? They work inside the company and they have access to data and information, and oftentimes their purchasing or selling, for that matter, can give you an indication as to potential news that is not released to the public just yet. Okay, so I said that the entry should be right around 672. Keeping a stop loss 630 to keep a good risk reward. And I said the target would be around $8. And the last signal that I indicated was from the chart was that it's a buy signal. So let's look at what happened. So here we are. CYH, Community Health Systems, good earnings, volume, second day, we see a gap up. And today was up 6%. If you're consistently hitting more than 5% on any of these trades, you are beating the majority of traders that are out there, or at least non-professional traders that are just kind of out there hoping to make a quick buck, if you will. This is a testament to why it's important to prepare, to plan your trade and then trade your plan, and remove as much emotion out of the process as you can so that the trading is less cumbersome on your mental and physical psyche. And the reason for that is because when you've done your research up front and you enter into a trade, you have the data, so to speak, to back it up. And so if a trade goes against you, you can certainly convince yourself that it's a good trade and try to play mind games and then be emotional. But the point is you'll know where to put your stop loss at. You'll know when to get out, and you'll have a good background of what the stock is doing, how it's performed in the past, and where it's likely to perform moving forward. So it's important to be prepared, and it's important to trade the plan. And if you look here today, it actually closed at 718. So of course, nowhere near that $8 mark, but this is a good potential swing trade. I got in right around 676, and I actually ended up getting out right around 735, I believe. 735. Let's look at the 1 minute chart. And I honestly would have held longer, but something did come up, and surely I could have placed a trailing stop or another stop loss in there. But I was satisfied with my gains. And being that it was a Friday with the overall market being down, I think the Dow was at that point was down around 224 points. Just a quick spot check got me a little too concerned or worried. And I was too consumed with what I was doing to the point where I wasn't going to be able to come in and check it. And I figured it being a Friday, I wouldn't want to be stuck in a late afternoon sell-off for that matter. But anyway, just wanted to run that by you guys. Quick trade recap. Definitely a good green day, finishing a solid green week, and a fantastic February 2020. So thank you all very much. Feel free to like and subscribe. Feel free to log on to a2zstocks.wordpress.com. And of course, if you have any suggestions as to what you'd like to hear and see, please let me know. Look forward to talking to you guys again.